Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here getting an update from Blackrock Silver, traded on the TSX Venture Exchange under the symbol BRC and on the OTCQX under the symbol BKRRF. We are chatting with the president and CEO, Andrew Pollard. Now, Blackrock Silver just released an updated mineral resource estimate at the Tonopah West Project that was released October 10th. And we saw some growth in really every category here. The updated mineral resource now comes in at 100 million ounces of silver equivalent, mostly a split here between gold and silver. You have 570,000 ounces of gold and almost 48 million ounces of silver. This is a 135% increase over that last mineral resource estimate that came out in April of last year. You also added in a couple new resource areas to this resource, and the overall grade at a 200 gram per ton silver equivalent cutoff increased by about 14%. So, Andrew, take us through where some of the key growth came from in terms of this resource, please.
Yeah, well, listen, the biggest key driver of the growth was a better understanding of just where the system's going and how all of the drilling we've done this far is related to each other. I mean, it's very important to keep in mind that, it's only 3 years ago that we started out drilling our first drill hole here, and it's not like we inherited a big drill hole database. We started with nothing on this set of claims where all of the resources are held. So, for the first year and a half, I mean, that's where we did the bulk of our drilling, but it was also like trying to drink from a fire hose in terms of understanding exactly how everything's related to each other. It was the drilling we did last year after the resource came out that was really like the linchpin. I mean, the way I think of it is, when you're starting with a big box of puzzle pieces and you just flip them down on the ground and you see all these random things, but you don't really know how they're related. But then once you get a corner piece there and another corner piece and another corner piece, and all of a sudden, you're piecing things together very, very quickly. And that's the stage that we're in at now. So, we went from, on our first resource, roughly 45 million ounces. And for many people, it was just too small to care. But what we've really done here is we've taken a giant leap forward in our understanding. We've established broad continuity in areas that we just couldn't tie together before, just using this new geologic interpretation of where exactly things are running. We stepped out considerably over a kilometer from where the last resource left off. And that was the first drilling we did last year after that. And what that showed is that the system, instead of just going east-west like the old timers, originally just envisioned, the vein system starts curving up very, very aggressively to the northwest, which is great for two reasons. One is, well, we've just confirmed the expansion potential of the district. And two is our property boundary. We were running out of space to the west anyway. So the fact that this whole system goes up beyond kilometers now to the northwest and it's wide open and we've got plenty of room for it to run is a big, big blessing there.
Well, Andrew, you've done a fantastic job. The exploration team has done a fantastic job of stepping out and showing some of the size and scale here. And like you say, kind of tying this together, those puzzle pieces. You've got really 3 deposit areas. So maybe just walk people through listening that are looking at this resource, what the goal of the company was. You weren't trying to just do 10 to 25 meter spacings and just prove out a bunch of M&I resources here. You were trying to show the scale and how these 3 deposits tie together. So maybe walk people through a high level of what the goal of this resource update was.
Yeah, well, listen, when we started, we had nothing. We didn't even know the old timers really left all that tonnage behind. That first resource confirmed, just in the 2 areas on our project where the old timers were either mining or preparing to mine when the Great Depression happened. And the company, it's called the Tonopah Extension Mining Company, went out of business. And we were the first group to come in, consolidate these claims in about 90 years. And, our drilling was the first that ever happened. So that first pass we did was really just to drill out the 2 areas that the old timers said were, good as gold. And the drilling we did last year was to confirm the expansion potential. Now what we're left with is, we've got 3-4 different deposit areas now. But what people need to understand is this is all one big system. So the next real push isn't to have 3 deposit areas, it's to infill the gaps between them. There's substantial, whereas the last resource, there was no real upside baked in. A lot of people thought it was about as big as it could possibly get, or it would grow incrementally. No, that's not what's happening here. No, we've blown open the doors to our understanding here. I mean, just between our DPB resource area and this new Northwest Step Out area, which we've included for the first time, still about a kilometer yet of strike that we've yet to infill. It's all the same system. That's easy, low-hanging layup sort of drilling for us. We already know where it's running. Same goes for between our Victor deposit and our DPB area. There's about 500 or 600 meters between the two, and we've yet to drill those out. So the next goal on the drills will be simple. It's to take these three deposit areas and bridge them together as one. You know, drilling M&I from surface at this point, I mean, well, it's a very straightforward answer. I mean, would you, as market participants, been more happy if we took our original inferred resource of, say, 45 million ounces and just focused on converting that to get M&I 45 million ounces? Or would you have preferred us focusing on figuring out where the system goes, tying it all together as one, you know, maybe wrapping some economics on it once we push through this next round of drilling, which we'll probably look at getting through next year, and looking at one cohesive system. I mean, we're sitting over 100 million ounces now at some of the highest grades of any undeveloped project in the industry as it stands. I mean, this is clear. We've gone from being, you know, maybe we'll need to bolt on other projects as acquisitions. Maybe we'll need to find ways to justify building a mill to, you know, now it's clear standalone potential. We've still got more upside there. And it's, once again, some of the highest grades in the industry. And at that, you know, we're in Nevada, unequivocally the best jurisdiction, and private land at that, meaning permitting will be streamlined here. I mean, this is probably the most advanced inferred resources you'll ever get your hands on, simply because, you know, if I'm a mid-tier or major mining company looking to develop the project, yeah, you can get permitting going concurrently with the next round of drilling, look at going underground and drilling from M&I ounces out from under there. That's not our focus now. Our focus is just figuring out how big the system is from surface, tying it all together, and really just walking it forward. I mean, it's been 3 years. It'll be interesting to see where we are next year and the year after, but, you know, this project's going to start tying together very easily.
So how much drilling do you think it will take to tie together these different resource areas?
I mean, versus what we've done so far, says it wouldn't be in the same realm. In terms of meters, I don't have an answer, but just in terms of the area, I mean, a lot of the early drilling we did was actually fishing around with the drill bit, trying to figure out where things were running. Now we've got pretty good anchor points on both ends, certainly between, say, DPB and that Northwest Step Out area, where it's just, you know, mine extension, vein extension style drilling, mine expansion drilling, right? So we'll be less fishing around the drill bit and, you know, the spacings. I mean, you'd think probably 20 to 30,000 meters would get us there. But it's, as investments go, I mean, you should see serious expansion on the next one once we get moving.
Well, Andrew, one of the takeaways I have just in looking at it is just how much gold is present along with the silver. And when you think about a lot of silver companies, none of them are pure silver. Most of them are silver and base metals. They have zinc or lead, things like that. In this case, it's really a precious metals deposit, but is it a gold deposit or is it a silver deposit?
I mean, it depends on the day. I mean, honestly, it depends on which inputs you use. I mean, in terms of what you're actually drilling in the ground, it's about 100-to-1 silver to gold ratio. Now, how you weight that in terms of like our resources based on 1850 gold and $22 silver. So we used an 84-to-1 ratio on this, plus the individual metallurgical recoveries to come up with this resource. But it's, yeah, about 55-45 at this point on an in situ metals value, gold versus silver. I mean, but this is still one of the highest silver to gold ratios in the industry for pure play precious metals deposits. I mean, there's no lead, there's no zinc. What you'll see is that, you know, this is very similar to Silvercrest Las Chispas deposit, both in terms of initial size and grade and the silver gold ratio, and just that it's a pure play precious metals district. So these sorts of ounces tend to command the biggest premiums in the marketplace. I mean, hell, look at this. Last month, or even coming into this month, we were commanding the single highest grade ounce in the ground valuation of any silver developer in the industry right now. We just put the resource out yesterday, so it hasn't been priced in. Now we're trading at about 50% of our versus our high grade peers. That's the valuation gap. This is the fun part here. You know, and they say, well, you know, maybe it just stays here. Well, the best cure for low prices is low prices. If you don't think a silver producer is going to be looking at this, seeing the valuation gap, seeing our private land position in Nevada next to a town with, you know, no need to build man camps or move power lines or build roads. This is something that if it stays here and that valuation gap remains, then, you know, my biggest fear is someone making a predatory offer at this point. we're happy to let things breathe. We're going to be doing a big push in November in terms of conferences and meeting face to face with investors, both in North America and Europe. And we've got no intentions of getting the drill there to finish out the year either. So we're in a good position financially to let things breathe, have the discussions we want to have with the various potential strategics and suitors, and also wait for the Fed to give us some clarity on will they, won't they, in terms of one more rate hike or not. And hopefully we'll see silver and gold valuations swing back. Last month, I've always talked about this, but, high grade ounces just like ours were trading around $1 an ounce. We were trading a slight premium ahead of our other high grade peers, but about $1 an ounce. Those same ounces were trading for about $2.50 to $3 an ounce 3-4 years ago amongst our peers. That's the real re-rate opportunity, is both obviously closing that gap between where we are between our peers in the industry, but also the re-rate potential that you'll see for all of us, the rising tide notion. When these ounces start re-rating back to their mean, which was well over $2, $2.50, $3 just a year and a half ago. So, there's many ways to win here, but the projects never look better. And, the expansion potential here should be inherent for anyone, whether you're a corporate analyst or whether you're a retail shareholder, just looking at the big swaths of land in between the deposit areas that we've yet to drill.
Yeah, no one's going to argue with you, Andrew, about just how decreased in terms of value in the ground ounces get right now, but that's been across the board, right? Now, you did mention, look, you're still in growth mode here. You want to drill in between these resource areas. You did mention a PEA earlier on, or putting some economics around it. When does it come the time to put those economics around this asset?
Well, PEA is effectively a back of the napkin mine plan. We're going to put a mine plan on this thing once we establish continuity between the deposits, because it's not like we're going to develop them separately. So, would you rather get underground for one big system, or, try and get declines into, 3 or 4 different areas? So the next big push is very straightforward. It's not going to take all that long on the drills. I mean, depending on how much time we want to compress, meaning how many drill rigs we put on it. I mean, it could be 6 months worth of drilling, or it could be 2 years of drilling if we slow things down. I mean, it's really, the ball's in our court. We've got no work commitments on the property. Our understanding's never been better. And the one final push on the drills, at least, the lowest hanging fruits, infilling those areas. That northwest zone is still wide open to the northwest. So, that's not even talking about continuing out along strike. I'm still just talking about the lowest hanging fruit, the mine expansion style drilling we're doing to connect them, which will likely be next year.
Well, Andrew, just kind of wrap us up with the key catalyst you want investors looking out for as we round out the year and head into next year. We didn't even talk about some of the other value drivers for the companies, like your exposure to Tonopah North and some of the lithium claims that Tier Like Resources is working on, some of the work you've been doing at Silver Cloud. There's a lot going on with the company. What do you want investors to focus on moving forward?
Well, I mean, all of our valuations tied to Tonopah, and I mean, this is now a globally significant deposit. I mean, we're over 100 million ounces at some of the highest grades, and these are block diluted grades at that. So we present, once again, very conservatively. This is a very defensible resource from the eyes of a corporate or suitor. You're not going to be able to poke many holes in it. So right now, as an investor, I'd be looking at that valuation gap. You don't often go from industry leading ounce in the ground valuation to overnight trading for 50% less on an ounce in the ground to your peers. These things don't last that long. As investors go, I mean, this should be a baseball bat across the head in terms of looking at value. If your outlook for silver is good, and you obviously think that it's going to run from here, then this should be a clear standout in the industry. So right now we're going to, as I said, get in front of people for the next month or two, do as many site visits as we can. We're going to have a busy schedule in November, and the winds that are back. We're not in a position where we feel the need to rush out and do a whole lot in this market where drill results really aren't being rewarded for resource developers. We slowed things down this year in a big way, and that was a blessing. One of the reasons we slowed down, to answer your question on Silver Cloud, was because we hit this bonanza grade discovery hole last year, which really gave us something compelling to look forward to on that front. Potentially walking forward, a multi-ounce gold discovery on trend of 2 very famous mines in northern Nevada there. So it gave us something compelling to look forward to there, but it freed up a whole bunch of time because there wasn't that need for us to go, keep sprinting at Tonopah. It allowed our technical team to take a real step back, look at things from a different angle, compile all the data, go back at everything we've done, and we put our head down and we were able to backstop our valuation now by 135% more ounces. So the silver cloud, we'll probably have some more news on that in the coming days or weeks. Tonopah North, I mean, yeah, we've got what looks to be a big blanket of lithium sitting right at surface just across the street from where our silver gold deposit is at depth. And Tierlac did 11 drill holes so far this year, following up on our discovery there last year. I mean, Tonopah is not only a famous silver gold district historically, but it's emerging as, the Carlin trend of lithium deposits. You've got some of the largest lithium resources in the industry in the world right next door to us. We're right next door to American Lithium's TLC deposit, which they put out a PEA this year. It had a $5 billion NPV as one of their upside cases. So, that could be, our partners drilled out roughly 7.2 kilometers, with every drill hole hitting, significant zones of lithium mineralization. And they just actually acquired some more land that came available adjacent, which initial samples have come back very, very high grades. And I think they're going to try and tackle that on the drills next year and put a resource on that when the time is right. So the idea of Tonopah is coming together very, very aggressively now. The vision for the project is, the clarity level is just really, really brightened. And, I think this is going to be a standout in the industry for when the market does come back. I was at Beaver Creek a couple weeks ago at the big institutional and corporate conference down there. And the big message I was left with, having spoken with a lot of the, various strategics and producers, was that they expect premium M&A deals to start kicking off very, very shortly in the industry. So that's, we certainly don't want to be the first, but, third or fourth might be good too. So, what we're going to do is just keep adding value to the project via the drill bit and wait for that market to turn around. Because when that tide rises, I see violent re-rate potentials for all industry participants in the silver gold spaces, but it's going to be flight to quality first. And, private land in Nevada next to a town is hard to compete with when you look at, the global picture right now. So we're very happy with how things stand. And I think the next few months should be nice ones as we look to bridge that gap between valuation amongst our peers.
So, Andrew, real quick, just how much cash does the company have in the bank? And as you keep saying, you're going out there marketing. When do you put the gas pedal down again and get those drills turning, get the expansion going again?
Yeah, well, I mean, we're in no rush to get it. It's just one of those markets right now. So why would we go out and raise a whole bunch of money right now to, rush to get drills at the project in a market that's really not valuing resource expansion drilling for, across the industry? I'm not even just talking about us. I mean, I haven't really seen anyone in my portfolio who has really moved positively on the back of more drill results, unless, of course, you're a brand new discovery. So, these markets don't last forever, and this one's long in the tooth, and the Fed's, running out of ammo here. And I think the first sign that, we get that pivot or, get closer towards that first rate cut, whenever that may be, is when silver and gold, really, really kick into overdrive. And in the interim, as I said, the best cure for low prices is low prices. I mean, this sale isn't going to be going on very much longer. I mean, we only put the news out after market yesterday. We're doing a webinar this afternoon at 1 p.m. Pacific, but interest in that has been off the charts in terms of registration. So, I think we'll see some continued tightening moving forward here as people really wrap their heads around the model. And yeah, it's just one of those things where in terms of cash right now, we're sitting at just under $1 million, but that's a lot of money when we're not drilling. We don't really have any major obligations coming up. And, we'll start worrying about finances when we want to get the drills back there. But at this point, let's have the conversations. Let's let the resource breathe and, wait for the tides to come back our way before we swim to shore.
All right, Andrew, thank you very much for this update. We'll post a link to that updated resource estimate news release. And if anybody has any follow-up questions, please email us. And full disclosure, Shad is a shareholder of Blackrock Silver. Andrew, keep us up to date on future news. Thanks for the update today.
Thank you. Cheers.